Good afternoon, everyone, and welcome to PSE's Stock Market Webinar. Our topic for you this afternoon is Stock Investing During a Pandemic, Beyond Risks and Uncertainties. I'm John Garcia from the PSE's Market Education Department. We are glad to have you with us. You see, living in today's world is even riskier, and the future has never been more uncertain. So investing in stocks always have come with the uncertainties, and these uncertainties, they tend to increase during times of recessions, wars, pandemics, negative occurrences. So this uncertainty affects the economy. The negative impact on it has impact also on the sectors and the businesses, no? And anong impact nun sa stocks natin? Weaker stock price performance and probably even the overall market. So this webinar this afternoon, our speaker will guide you, the participants, on how to navigate through this challenging stock market. So are you guys ready? I'm excited. So I hope you guys are also excited as I am this afternoon. Okay, so just a quick disclaimer. Please note that this presentation is for educational and informational purposes only. This should not be construed as a professional, financial, or investment advice or recommendation from the PSE. All right, so with those out of the way, allow me to introduce our resource speaker this afternoon. He has 7 years of experience in equity research. He has covered renewable energy and technology firms for CTS Global Equity Group, Inc. So that's actually formerly Citi Securities, a sister company of Call Financial. If you've heard of Call Financial, one of the leading online stock brokerage firms in the Philippines. And moreover, he also has experience in proprietary trading and technical analysis. Very, very interesting guy. So he had also previous work as a sales associate for investor services under corporate investment banking business of JP Morgan, covering various products such as global custody, fund accounting, collateral management, and securities lending. We will learn a lot from our resource speaker this afternoon. I can't wait to listen to his presentation. Ladies and gentlemen, please help me welcome Mr. Rastin Maki D. Mercado. Good afternoon, Ras.
Hi, good afternoon, John. Thank you for the generous introduction.
All right, we're glad to have you with us. And the floor is yours.
Okay, magandang hapon po sa lahat. Thank you for taking the time to be part of this webinar. Hopefully, we can impart as much as we can to you guys. So let's kind of deep dive now into the topic for this afternoon. So we'll go through a lot of stuff, but hopefully this presentation kind of gives you guys an idea of or an answer to some top of mind questions. So first question, I think a lot of us are thinking, mag-invest na ba ako ngayon, or I should wait more, or I should wait a little bit more, right? So hopefully going through the presentation, this kind of gives you an idea that right now is actually a good time for you to be buying. Another question that you guys might have is, should I sell now? So today we saw the volatility market kind of it actually went higher today, right? Trading around 6.1 and then closing above 6.2. So we'll also try to get an answer to that question. Okay, so next slide, please. This is just our general disclosures. And next slide. So how do we go by the whole navigating the crises and how you will act with regard to it, right? So first, I think it's important to know what is an uncertain time for the market. So alam naman natin lahat na maraming nangyayari na nag-move na markets or moves markets up, down, or more volatile. So what should you be paying attention to? Next is measuring the impact. So may nangyari, gaano kalala yung nangyari, and at the same time, how will that affect your personal investments? Next, of course, is eventually once the recession seeps in, you're trying to find an investment to kind of buy. Ano yung uunahin mong sectors? So we'll dabble a bit doon. And then seeing what lies ahead, right? So right now our economy contracted for the 5th straight quarter. So what does that mean for equities? Is it really more downside? Baka ba yung index, or baka tataas na siya? soon enough, right? So that's what we're gonna go through this afternoon. So first off, uh, next slide, please. So ano yung uncertain times, right? So there are a few things that we kind of identify which lead to uncertainty. So next click, please. So there's geopolitical tensions and crises. So ito yung like for example, in the UK, you had Brexit. So that's geopolitical tension. Trade war, this was a big thing in 2018, 2019. So nahulog yung market. Obviously, these are things that are more political and policy oriented, right? So this does affect markets. Next, financial and economic crisis, right? So we've seen this quite a few times already. We had one in 1997, Asian financial crisis, 2007, 2008, that's your global financial crisis. And now we're in a recession, right? So obviously that also drives uncertainty, leading into lower appetite for stocks or actually asset classes in general. Next. And also one last thing, health crises and pandemics. So over the past decade, we've seen a little bit of outbreaks and pandemics. We had H1N1, swine flu. You also had MERS, right? So these are disruptive to markets to a certain extent. Pero syempre, yung nakita natin yun in 2020, ngayon, it's a different story, right? So that's more disruptive than the others that we've seen over the past decade. So we'll talk a bit more about that. Okay, so next slide. Okay, so we'll focus on these things one by one, and I'll give examples. So a little bit of cuento, just so you can get into the groove of what to look out for, right? So first example of a geopolitical tension crisis. So in 2010, 2012, there was the Arab Spring. So ano yung Arab Spring? So these were a series of rallies in Arab countries in 2010, 2011, 2012, which helped lead a surge in oil prices. So since may tensions in the Middle East, oil prices went from mid-90s, so 95, all the way to $120 per barrel. So on one end, syempre, tumaas yung presyo doon, so that led to some inflationary pressures here. But more than that, specific to the countries that were affected in the Middle East, may affect ranges of foreign fund flows. So any tension or any crisis that springs out usually makes foreign funds a little bit more cautious. So ang ginagawa ng foreign funds is they will liquidate or move their funds somewhere else, somewhere that's relatively safer or more stable, right? So that's what those countries saw. We also have Brexit and Brexit. So Brexit, I'm not sure if you guys remember, but basically it was because Greece, medyo malaki yung debt niya, and then nag-balloon siya in the wake of the global financial crisis in 07, 08. So nag-downgrade yung credit rating niya. Obviously, pag downgrade yung credit rating mo, servicing debt or interest rates go, the interest rates that you pay for your debt effectively goes up, right? So it becomes, it leads to financial instability. So that's what happened to Greece back then. So to help save the country from bankruptcy, some position that Greece should exit the European Union. So that's why it's Grexit. So it's the Greek exit. So similarly, we also had the Brexit, which started in 2016 with the referendum. So Great Britain wanted to exit the European Union because it wanted to have more control over its policy making, right? It wanted to make its own rules. It wanted to negotiate its own trade terms. So that obviously more than markets, right? Some businesses, a lot of businesses actually are based out of the UK, right? So what those businesses did is kind of move some operations elsewhere in Europe. So there's really some disruption, not just in terms of fund flow in the markets, but also businesses and their structure. So that also makes investors kind of, wait a minute, risk off muna tayo, right? And of course, something that we've experienced, I think, most recently was the U.S.-China trade war. It's actually, if you think about it, when we ended 2019, that was when the trade deal was signed between the U.S. and China. Right? We coming into 2020, we were all optimistic now. Okay, tapos na yun, para there's nothing that will probably stop us from recovering, our economy growing, all of that. And then the pandemic came. So it was kind of like double whammy because you had expectations na mataas for 2020, which kind of was broken down by the pandemic that we're now experiencing. So just to give you guys an idea of how, for example, one of these things affected markets. So next slide, please. So this is the U.S.-China trade war that we see. So these are some milestones in the whole trade war that kind of drove markets. So if you look at it, around July 2018, the U.S. imposed the first round of tariffs. At that time, a lot of people were still skeptical. Parang, is this really going to be a sustainable thing? Talaga bang tuloy-tuloy yung trade war na to? So there was still skepticism there. What happened was, no mga September of the same year, the US said, okay, we'll build up that threat of a tariff and we'll actually follow through on it. So they imposed tariffs on 200 billion worth of Chinese imports. So obviously this was a tit for tat thing. So parang nagsagutan sila in terms of tariffs, which kind of led markets to head lower, right? And then throughout the course of the next 1.5 years, you see the US-China agreeing to a ceasefire in the fourth quarter of 2018. And then heading into May of 2019, the trade talks broke down. So the markets saw volatility, nahulog siya. And then they entered the new cruise. So at some point, if you look at the charts, every progressive development in regard to the trade war was less disruptive, right? If you look at 2018, parang market swings were wild just because people were still trying to price it. Ano ba talaga yung effect nung tariff to or yung sagot to? And then eventually the market was just, okay, sige, parang we'll take it as a given. We already priced it in. Pricing it in means, okay, parang even if may ganyan, parang ito na expectation namin. And factor in na namin kung ano yung plano nyo or sinasabi nyo gagawin. Right? So that's what it means to price in things. So you'll hear that a lot throughout the market. So eventually it did sign a trade deal in the end of 2019. Now, obviously, markets were on better footing then, and then we went into the pandemic, right? So next slide. So now we're going to talk about financial and economic crises. So what were the financial and economic crises of recent history? So we had the Asian financial crisis. That was attributable to hot money bubbles. Back then in 1997 or before that, a lot of emerging markets around Asia, Southeast Asia, were actually growing strongly. This were GDP growths around 10 to 12%. So these were really high, strong growing economies, right? So this growth was primarily because of growth in exports and foreign investment, right? So a lot of funds were bullish, a lot of foreigners were bullish on the region, so they went in. So a lot of these countries attracted foreign investment with mataas na interest rates, right? So pasok kayo sa country ko, mataas yung interest na nakuha niyo on my securities. At the same time, sige, i-fix ko yung FX rates natin, right? So at least, so effectively, yung risk of foreign currency volatility was shifted to the countries that were kind of effectively securing these investments, right? So the problem started when the Fed started to raise rates, and then that hurt export growth, and eventually, so nangyari, it led to capital flight out of these markets, and then a contagion occurred. A lot of the depreciation happened across the region for currency depreciation. So that's why that was a specific thing to us particularly, where we were affected by this. So one lesson that we took out of this was, ngayon we have FX reserves. So you see the PSP reporting this every so often. This is actually to hedge against any external shock. So the higher FX reserves you have, the better for the country. So our FX reserves really are much higher now. So that gives us, like, we're in a good spot right now in terms of that. So we did learn our lesson. Global financial crisis, this is more recent, right? So this was attributable to the housing market bubble in the US, across mostly the US. So this is depicted in a lot of movies. You have Big Short, Margin Call, but basically it was interest rates were low, or houses were kind of affordable, and then people were taking out loans that they couldn't afford, right? So with the build-up of credit, hindi nakabayad yung mga tao, yung ginawa ng mga like some proprietary houses, they package these debt, yung mga utang, kinakansila, into layers, creating derivatives, diba? So effectively, these were packaged so much that you didn't know na kung ano yung loans na maganda, ano yung loans na hindi maganda. Right? So nangyari is nag-waterfall when people started defaulting on their mortgages. Sunod-sunod na siya. So that eventually led into a crash in financial markets, primarily in the US. So for the Philippines, our GDP growth slowed down from 6.6% in 2007 to 1.6% in 2009. So still growing, but obviously much lower growth. Lessons that we had there may new laws in the US that were implemented. So that effectively increased regulatory oversight of banks, and then the structural changes in the industry. So right now, these rules are still in place. So technically, we still did learn our lesson from that. So if you see a theme here, it's all of us kind of okay. We know what happened in the past, and us working towards not making them happen again, right? So the last part here is the COVID-19 recession. So as we all know, uh, new virus emerged late December of 2019, and then the whole world goes into lockdown, right? So what was a week ago, bukas lahat, we were we were in our normal lives. A week later, we were in our houses, unable to go out, right, because of fear of catching this virus. So obviously now some countries have fared better. The balance of things, if makita mo, maraming developed countries are starting to get out of their lockdowns and going back to normal. I think the prime example here is the US. Just today, I think they're already saying that they can go out without masks for most of what they can do, for most activities. So effects of the global economy, 3.3% decline. And the Philippines, obviously, we fared a little worse, 9.5% decline in 2020. So recovery is still underway. We've seen developed markets lead that recovery, and that's still expected to be choppy. So global economy expected to expand 6% this year. That's for context, around 6% growth is very emerging and developing market kind of growth. So medyo mataas yun. The developed markets natin, usually 2 to 3% is already a little bit high or near the long-term growth rates. So for the IMF, the Philippines is expected to grow around 6.6%, but this was in March, so baka nagbago na to just because we had that lockdown in late March. Right? So next slide. So this is just an example of how the global financial crisis affected the PSEI specifically. So if you guys were in the market back then, the real nail biting drop was in late 2008. But the signs of this global financial crisis unfolding actually happened way back in 2007, right? So we all know Bear Stearns, it bailed out two hedge funds, and then the US Fed started to cut rates, and eventually Bear Stearns faced bankruptcy, and then I think the more popular Lehman Brothers filed for bankruptcy around September of 2008, and then that led decline in the US markets. Obviously, we reacted, heading lower, and the Fed eventually deployed QE1, quantitative easing. So eventually, after all of that, with some regulatory developments also in the US banks started to report profit again around March, April of 2009. And then eventually, all is history, right? So from 2009 all the way to 2012, 2013, we did see that dramatic rise in the market. And nakita natin kung gaano kataas yung tinaas ng market back then. So next slide. So last, we did touch up a bit on this na. Next, please. So COVID-19 pandemic, we'll deep dive into that a bit more later. We already know that we're in the middle of it. We're trying to recover from it. It nahulog yung market because of it. So we'll talk about that in a bit. SARS, there was an outbreak in November 2002, July 2003. Markets really didn't react that much to it. So for the PSEI, the 1-month return was around 3.8% after it started. Swine flu pandemic, that's H1N1. We also performed relatively better. We actually did eke out again 1 month after the start of that. So relatively speaking, we haven't been reacting much to epidemics and pandemics, but obviously the COVID pandemic is global. So we're acting the way that we did now. So next slide. So this is a chart that I think uh, should give you an idea of how the market reacted relative to the number of cases that we've been reporting. So if you take a look at the chart, so our trough, yung pinakailalim ng market in 2020 occurred in middle and the midway, right? After the announcement of the lockdowns, first in NCR, next to Luzon. So that expanded. So we did see lows close to around 4,000s. And then that was just the initial spike in cases. Eventually, those spikes started to stabilize. And then the more dramatic spikes happened in August, when MECQ tayo ulit. So that forced the market down. So it went down a bit, but relatively between June and October, sideways. Market was consolidating. People were kind of saying, okay, well, this has happened. There's outlook for next year, and people are saying we're going to be recovering next year. The vaccines start arriving, so there's optimism there. And since may pent-up optimism, markets went higher throughout the tail end of the year, right? Culminating, of course, when vaccines started getting approved. That was around December. So now that we're in April, May, we are seeing spikes in cases again. So obviously the market has been reacting kind of negatively to it, but that's primarily because outlook right now is being mas may uncertainty na naman tayo, diba? Last year we said, okay, 2021 is the bounce back, but then we're in 2021 and we're still facing some challenges. So it's that not delivering on expectations is actually one of the main reasons why our market continues to be challenged at the moment. So next slide. So this is just a breakdown of how this all played out. So the first cases emerged in December. First domestic case reported in January. Local transmission happened in late February, early March. And then from then, lockdowns were announced. So that was a steep drop in March. And then our first round of fiscal stimulus happened. Bayanihan 1 was passed shortly thereafter. And then we did eventually see a downgrade to MTCQ. And then coming into August, another MTCQ round. So after we were downgraded to MTCQ and eventually GCQ, we did rally. And then eventually the market rallied toward the end of 2020 because your vaccines were starting to gain some traction. They were getting approved. Their trials showed promise. And then now we're on the right side of the chart. We're back. Well, we were in MECQ. We are in MECQ up to now. And then we'll put positioning into GCQ. Right? So hopefully that gives the market a reason or a cause to cheer and have it. Okay, next slide. So in terms of economic recession, so next piece. So this is the pandemic's impact. So first we have an economic recession, and I'm sure you guys are familiar. Recession is technically described as 2 quarters of contraction or contraction of growth in the economy. So technically we're in the 5th quarter already. So we're very well into our recession. We're actually looking towards recovering and back to growth. We also experienced sell-off and volatility in equity markets. We've seen them in the previous slides. The markets reacted based on how the COVID developments panned out. And then, of course, more than effect on markets and the economy as a whole, how did it affect you, us as consumers, and yung mga businesses that employ us, right? So next slide. So let's first start about the economic recession. So as I mentioned, the economy entered the 5th straight quarter of contraction in first quarter 2021. Unemployment rate rose to as high as 17.7% in April 2020. That's actually the highest in 15 years. A lot of businesses closed down, while some were able to keep their business afloat. For context, in the 2019 data release, MSMEs comprised around 99.9% of businesses in 2008, which is why it's really important for fiscal stimulus measures or kung anumang stimulus yung ibibigay ng gobyerno should be targeted towards your MSMEs because they comprise a lot of businesses and they employed back then, 2019, 62.4% of total employment, right? So it's really evident that these MSMEs are the ones that need to be kind of a little bit taken care of or guided through the rough patch in the economy. So that's what partially drove the high levels of unemployment. And then since you have unemployment, walang sweldo yung mga tao, walang pambili, walang pambayad, obviously the demand, uh, the consumption, yung paggamit natin ng mga bagay, bumaba year on year, right? So that led to earnings contraction for a lot of our firms, including the ones that are listed in the PSE. So next slide. So this is just to show you how deep the decline was in 2020. So our GDP growth rates have averaged around 6% since 2018. Last year, the steepest contraction was around 17%, and the recent data release from the Philippine Statistics Authority said that okay, first quarter GDP contracted 4.2% yearly, right? So these are record levels. So I think the most in around in a few decades, right? So again, that's already in hindsight. So that's not what the market is pricing in right now. Moving forward, it's actually looking at the path to recovery. So next slide. So in terms of policy action, so you're gonna hear two sides of the coin always when it comes to crises and recessions. So monetary policy, that's with the central bank. So yung Bangko Sentral ng Pilipinas, ginagawa niya, it deploys a set of tools. Part of those tools are policy rates, and some are and other tools such as reserve ratios and all of that. So once rates go down, it actually is encouraging lending out, right? So that's a form of stimulus. So it's trying to stimulate economic activity. So that's on the part of the central bank. So this happens across the world. All central banks, the US Fed, the European Central Bank, all of them deployed policy tools back in 2020. And they were quite aggressive with regard to it, which is a good thing. On the other hand of things, you have fiscal policy. So ito yung how much stimulus the government is injecting into the economy, right? So last year, a lot of our stimulus occurred through the Bayanihan Acts. So there were two Bayanihan Acts, and obviously the direct transfer, cash transfer, I think that was around 4,000 pesos, also kind of helped shore up demand in the economy, right? So as of now, the BSP continues to keep our rates at below 2%. And what we've seen last year also, even in 2021, is that the demand for loans or credit went down. So you can see that the appetite talaga and the ability of consumers and businesses to take more credit, purchase new items or services have actually gone down. So this is a testament to how we're actually a little bit skeptic or a little bit a little bit cautious when it comes to purchasing or consuming. Next slide. So we also saw sell-off in volatility in equity markets. So for the PSEI, from the beginning of 2020 all the way down to the trough, yung pinakamababang point in March, that was around 48.5%, right? Year-to-date losses last year, those levels were last seen in 2007, 2008. So in terms of market movement, the market reacted na parang, okay, we're back to the level of instability that we saw in 2007, 2008. So eventually the market eventually corrected itself naman, recouping some gains, so binawi niya yung konti yung talo niya, and then it closed the year pretty strong pace. One thing that we also saw is a continued exit of foreign funds. So we'll talk about that more in a bit. So next slide. So this is how the market was last year. So if you look at the start of 2020 all the way to the trough of March, it's around 48.5%. And then from that low point, so this is the exciting thing about markets and investing is that if you are able to invest at the right time or at kung mababa yung presyo or mababa yung pasok mo, buy low, sell high, your return for the year could have been as much as 79%, right? So of course, this is the PSEI. Individual issues fared fared differently. Some were outperformers, some were underperformers. But basically, it gives you an idea that there is an opportunity when the market sells off to lows, and if you're buying low, then the upside potential is intrinsically there, right? Next slide. So this is a chart of foreign fund flows since 2011 to year-to-date 2021. if you look at it, these are nominal foreign fund flows. So based on historical data, apparently you're giving a semblance na as of now, we're almost to half the foreign outflows we saw in 2020. So that's significant because first, we're just in May. There's still a month and a half left and the first half. And then this is also the fourth consecutive year thus far of foreign fund outflows. So foreigners exiting the market. So yung talaga sumusuporta sa market right now, yung mga domestic funds, domestic investors, uh, other financial houses. So they're pretty much betting on the recovery of the economy. So that's what's been supporting markets this far. Next slide. So coming into us specifically, how the pandemic affected us. So up to 26% of MSMEs were at least partially closed. So this is a significant amount. Remember, I mentioned earlier, they comprise around 60+% of employment. So having a significant portion, or 1/4 of them closed, has had that impact on employment, right? So it's really getting these MSMEs back up and running, employment back to where it was pre-pandemic. That's the challenge that we all face right now. Consumer and business confidence sank to decade lows. So we'll talk about that more in a bit. And then most companies in the PSDI posted earnings contraction, which is unsurprising because demand was lower, right? So I guess next slide. Okay, so the unemployment rate, as I mentioned, went as low as 70%. So went as high as 70%, sorry. So this kind of just gives you an idea of where we're at. On a full year basis, 2020 unemployment rate was 9.4%. The 5-year average is around 6.2, so it's significantly higher. Right now, we're still somewhere there. Higher, so okay, if pag mas mataas yung unemployment rate, ibig sabihin nun, mas konti yung tao nagtatrabaho. Mas konting tao nagtatrabaho, mas konti yung sweldo na pwedeng gastusin para sa pangangailangan ng mga tao. So that includes your groceries, that includes services and all that. So that equates to less private consumption. And obviously, since you're consuming less in a consumption-driven economy, that eventually trickles down into economic weakness. So that's why you're seeing a softness in economic growth and recovery thus far this year. So if you look at the relationship between unemployment rates and household consumption, so unemployment rate in your on the right side is the black line, and then household consumption is the red line. There's an inverse relationship, meaning kapag tumataas yung unemployment, yung consumption will bababa. So it's really that employment that kind of needs to improve even more for us to see that recovery in consumption. Next slide. So consumer and business confidence thing. So bakit importante yung consumer and business confidence? So it gives us an idea of the mindset of your consumers and your business. Parang if tinanong mo si consumer, are you going to purchase a house within the next 12 months? There are answers to that in the survey conducted by the DSP. So it gives you an idea of what consumers are planning to buy or any big ticket purchases throughout the next 12 months, right? So in that sense, a forward-looking indicator, right? So it's important to keep tabs on that. So what happened last year is nahulog siya syempre to decade lows. So the average is the dotted line for both. Even with your business, will I invest more? Will I hire more people? So if business confidence sinks, that means that they probably won't expand as much, they won't hire as much people. This is important. Why? Because if you look at the right chart, this is our economic makeup. So if you're looking at the expenditure side, which is household consumption, private consumption, and that's government spending. Government spending is in yellow, private consumption is in black. Gray is investment, so business investment. And then red is net export. So technically, we're net importers. So the main drivers of the economy really are consumption and business investment. So if your businesses and your consumers are saying that, yeah, maybe I'm not too optimistic for the next 12 months or the next quarter, then obviously, their appetite to engage in the economy, whether or not bibili ako ng bagay, bibili ako ng service, or mag-invest pa ako dito sa Pilipinas, will be affected, right? So that will eventually lead to what you'll see in the economy. Next slide. So we're going to be looking at how do you find the bright spots. So it's not a complicated thing to kind of figure out which industries will fare better than the rest. Actually, since we're all part of the economy, it sometimes pays to take a look at your own experience first. Right? So I'll walk you through that in a bit. And then apart from that, making sense of how the market is, right? So you think this is your experience, but then markets have a different way of looking at things, right? So it's finding that balance between the two that will help inform your decision making. Next slide. So first off, take a look at your own experience. Ano ba yung kinailangan mo nung nag-start yung pandemic? So, ano ba yung kailangan ko? Ano ba yung kakailanganin ko? And ano kailangan bilhin ko now or bilhin ko some other time? So first off, what did you see in 2020? Businesses reacted to the needs of their consumers. So, right tayo, we needed to pay our bills. We had more banks offer digital services, and you had some payment services that are based on mobile kind of grow in 2020, right? So this was something that I think everybody experienced. Okay, coming to the pandemic, when the lockdowns were initiated, and then even in the months and weeks after, ano ba yung pinakakailangan natin? So hindi ba groceries, saka personal protective equipment or PPE? So that equates to the strength in your consumer staple manufacturers last year. Diba? Kung ano binibila? Delata, quite shelf-stable goods, and retailers, sila yung benta ng produkto. So those companies relatively were stronger last year than the rest, right? And apart from that, ano bang mga solution kailangan natin? So a lot of us moved or continue to be at work from home setups. And then for students, e-learning. So it was important that you had a stable internet connection or at least data services. Diba? So that's why your telcos, in terms of stock price performance, were pretty much strong last year, right? Especially in the first half. So just looking at those experiences, kung ano yung kailangan mo, parang may idea ka na kung ano talaga yung mga kumpanyang mas magiging malakas, at least for the time being, right? So just taking from your own experience, that we're gonna get. So I think just to firm up that belief, if you look at the IPOs from last year, two were in sectors that performed relatively well. So one was in consumer staples retailing. I think that was the first one. And then eventually you had that other IPO about interconnectivity, which is also in line with what we needed last year. Yung kailangan natin. And then there was also another IPO that was exposed to office spaces. But then again, office spaces kasi are relatively better, more stable at this point at least, when it comes to first retail leasing, right? So office spaces were taken up more than mall spaces. So I think that kind of just your own experience will actually help you identify which sectors to kind of look at once you decide to invest. So next slide. So now we're looking into how the market thinks. So the black line is sort of a baseline. The red line is the market trajectory. So that's the stock market. Next, the gray line is economic trajectory, and then next, and then two more, and then there you go. Okay, so here's you might have seen this in literature in different ways. So nakita niyo siguro yung one version or another of this chart diagram. Basically, what it's saying is the market will move ahead of the actual economy. It's because markets are forward thinking, right? So the market will reach a low much earlier than when the economy slows down, right? So for us, we were already in yung pinakamababang point ng market last year, the PSBI was around March, right? But the actual, yung pinakamababang growth rate, the highest contraction happened in the second quarter. Diba? So it means that the market was already factoring in okay, tatamaan yung economy natin, even before it happens. So that's what the market does when it comes to downturns. Obviously, that's what the market will continue to do when it comes to upswings. So next slide. So I guess it's just just to give you kind of a semblance of ano yung mga industries that you should be looking at. Uh, Syempre, when the economy is growing, it's a tide that lifts all boats, right? So, ito yung mga times na an investor can't do anything wrong. So, that's similar to what we saw in 2009, 2013, nung packet yung markets. So, obviously, it's the same when it comes to economic contraction. Even if maganda yung story ng kumpanya, pwedeng bentahan because wala nga appetite yung market mag-invest, right? So, but there are some industries that will always move ahead of the others. So in terms of where you are in the market cycle, the economic cycle, as you'll see here, you'll have sectors that will be preferred over the others. So first round, you've seen it naman last year, consumer staples, those are retailers, it's your Pure Gold, your RHI, performed well. And then telcos, whether your Globe and your Tel, were strong in 2020. Eventually, this made way for a surge in capital goods. So capital goods, these are companies that are linked to construction materials. Syempre, when you're covering, you're rebuilding the economy, you have infrastructure spending, kailangan mo yung mga construction materials, construction equipment. You also saw commodity-linked stocks or basic commodities. Syempre, since the demand mo across the globe is starting to pick back up, you had base metals such as copper and nickel rallying. So we all know who those miners are. So they also did rally. And then eventually financials will start to pick up. The reason why financials are weak right now is because there is still concern about non-performing loans and provisioning, right? So that will impact profitability. So eventually, once that gets priced in, or eventually as things improve, as output improves, those will start to wane, and then you'll see a demand for credit start. So the demand for loans will start to pick up. Of course, once the economy starts to pick up, unemployment goes down, all of that, right? So, and also what we're seeing now is kind of a preference for trade-oriented companies. So I think specifically, there's one ICT is faring relatively strong right now because global trade is back on. Right, developed markets have recovered much sooner than anticipated, so that's contributing to that. And then after that, moving down the line, you will have industrial manufacturing, just because a lot more people will demand goods down the line, right? As unemployment goes down, you reach full employment, people have salaries, may sweldo, panggastos, for more than needs. You're also getting spent for wants, so eventually it's going to trickle down. After that, you're going to see a surge in focus for energy stocks because since your economy is expanding, syempre kailangan mo ng mas maraming energy. So you're going to have to build capacity for that. And then once you reach the market peak or where you're towards the peak of the economic cycle, you usually see consumer discretionary travel restaurants kind of pick up. Ito na yung mga wants natin versus needs. Right? So, syempre, we can only afford them when we have enough money to buy them or purchase them. Property is strong at this point. Why? Because inflation had shit, right? So, property prices, as we all know, usually just go up. So, usually when the economy starts to pick up back up, inflation goes higher. So, property prices obviously will help protect against those inflationary concerns. And then commodity links, since the theme is okay. Ano ba yung pwede ko hawakan na hindi ma-devalue based on inflation? So precious metals, gold, that's where you see those kinds of commodities rising, right? So this is just an overview of how, in general, it has been over the past decade. You also have utilities down the line. Utilities are defensive because syempre kakailangan natin utilities no matter what. So each cycle is not the same. So take you from your own experiences. So, for example, as you see in the diagram, for example, consumer discretionary has its own part in the diagram, right? So, I know that some home improvement retailers have been very strong over the past few months, right? Why? Because when we started working from home, when we were in lockdown, a lot more people were renovating. So, may mga stories na ganun na, syempre may sarili silang tempo. So that's why they're performing strongly. So it's really based on your experience. You can actually make informed decisions just based on your own experiences. So that's what we're trying to do. So where we are now is there. So it's the road back to pre-crisis levels. So pinakamababang point na market, already probably tapos na. That was in March last year. But syempre, as we've seen, the path going up isn't a straight line. It's been very choppy. So next, just to give you guys an idea of what lies ahead. So vaccination is the key ramp up for is the key for ramping up the economic recovery. So this has been a closely followed story across a lot of analysts and also a lot of news outlets. So it's really when we're going to get back to pre-pandemic levels in terms of economic output. At the same time, growth on top of that, right? So encouraging yung nakikita natin dun sa mga markets that have already recovered. So for the US, if you guys don't know, in the first quarter, they actually had more domestic air travel than pre-pandemic levels. So it means that yun yung promise of what we could achieve potentially if if vaccinations start to ramp up the way that they have been in the US. So that makes markets a little bit more optimistic, right? Next, economic recovery is a certainty. So you all know, based on history, even after the Asian financial crisis, even after the global financial crisis, economic recovery happens, right? So that's not uncertain. What is uncertain is the timing. So that's where the market is kind of trying to price in whether or not it's the second half of this year, or next year, or when. So that's what we're not sure of. And then a recovery in stock prices usually happens before the recovery in earnings. So as you'll see in the next slides, the growth in earnings usually follow prices and vice versa. So next slide. So the left-hand side is a great diagram from the IMF in their World Economic Outlook report that was recently released. So what does this mean? So the red is pretty much how disruptive lockdowns were in terms of economic activity, right? So if you look at their more stringent lockdowns, the higher the change in economic activity. That was towards the beginning of last year. Now, if you move towards the blue, which is towards the end of last year, the effect of succeeding lockdowns were actually smaller. Why? Because one, lockdowns were a little bit more targeted, so mas localized siya. At the same time, sanay na rin kasi mga tao sa setup. So they know that, okay, pag may restrictions, di mangyari, work from home, medyo sanay na tayo. So it will become less and less of a downside risk moving forward. So hopefully that continues to be the case. Now, on the right-hand side, you'll see, okay, when is the Philippines going to go back to pre-pandemic levels? Right now, consensus is seeing that recovery going back to pre-pandemic levels in 2022, right? Developed markets, unsurprisingly, they're expected to go back to pre-pandemic levels in 2021, this year, right? And we've been seeing that. So we're expecting for the Philippine market around 2022, 2023. There are different views, but at least over the next 2 years, we should be there. Next slide. GDP growth. So still consensus projecting back. We're going to come in stronger in the second quarter, mainly due to the low base from last year, but we'll eventually sustain that level of positive growth towards the next few years. Right. So this is particular to the Philippine economy. Next slide. So there's a strong correlation between earnings growth and the PSEI. So obviously the PSEI will go up once earnings expectations go up or earnings delivered go up. Right? It's no question that's what stock prices follow. Siyempre, pag mas kumikita yung mga kumpanya, mas may engganyo yung mga tao mag-invest, right, in the company. So for so long as that continues to hold over the past decades, so that will continue to hold. So once our companies start reporting stronger earnings, which some have, then it's just a matter of time for stock prices to follow. At the same time, pwedeng mauna yung stock prices and it's just yung earnings, right? So it all is contingent on outlook and being able to deliver on expectations. And then next slide. So this is just to give you guys an idea. So if you were investing back then, 2006, 2007, click next, please. So when stock prices fell, that was around 56.6% decline. Now, back then was, okay, end of the world, probably, this is capitulation, too much, ayoko na, 26% broad. So you think when you bought it around 4,000 that, yeah, maybe I should get out. But then eventually what happened was from that decline, the market actually went higher over the next few years, right? If you look at it from '08 to 14, that's 6 years, the return on the market was 4.2 times your money, right? So it just gives you an idea of how much potential there is when your economy continues to grow and your companies continue to grow their earnings, right? So right now we're in a position where, okay, from last year we saw around 48.5% drop in the market. What will happen next? So it's the growth that we're actually excited about, and that's what you should be thinking of when you're looking to invest in companies, right? So I think I'm down to my last slide. So one last bit, some pieces of advice in the market are actually timeless, and we continue to see them continue throughout the many moves that we're seeing. So Sir John Templeton said back then, bull markets were born in pessimism, grown in skepticism, mature in optimism, and then euphoria. So the time for maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. So just looking at where we are now, where we're pessimistic, we're not sure if the recovery is going to come in when it's expected. We're in the middle of pessimism and skepticism, clearly, right? So from here, there's only, there might still be some ways off. Markets can still capitulate, yes, but if you think about it, how much more downside is there compared to upside, right? So if you're buying now, downside is probably, if you look at it, 5.5, 5.8. But then again, in terms of probability, that might not be too it's not too probable, right? If ever shorter now. But then the recovery ahead, that's where you kind of have to take a look at, zoom out, right? And say, okay, down the line, the next few years, where is this going to be? Where's the Philippine economy? It's going to be in a much better place. Your corporates will start to turn around and then start reporting strong earnings. Right? So it's just a matter of time. So just wait it out. So just going back to what the few questions at the top of mind that I was saying earlier, first slide. Do I invest now or do I wait until later? So I think first it's hard to catch the profit, right? It's really hard for you to be able to catch the maximum low of a move, right? Market cycles are 7 to 10 years long. So it's really hard to catch it. Even if you buy it around 4 or 5 after the initial drop, you would have still made in the PSA return of 100% when the market surged to 9,000. So there's always going to be an opportunity to buy into the market. Right? It's just a matter of figuring out what the risk reward is, what you can handle and what you can't. Right? So in our poll earlier, a lot of you guys have medium risk appetite. So what's the risk reward at this point? So it really does depend, right? So right now we're in a place where your expectations are pretty low, market's pricing that in, but then ahead you're seeing a lot of potential, right? So I think in terms of risk reward, you're already much closer to the bottom than you are at any top, right? So if you think long term, then it definitely is a good time to invest now, where people are being skeptic about the recovery.
Okay, so thank you very much, Ras, and we hope to get to invite you again in our future webinars.
Thank you for having me. Thanks, John.
Okay, if you need to get in touch with the PSE, all you have to do is call our hotline. Our number is 8876-4888, or you may also email info@pse.com.ph. If you need to get in touch with my team, the Market Education Department, our email is academy@pse.com.ph. We have a new website, so I'm inviting everyone to visit the new PSE website. It's very, very nice. I'm so proud of it. We keep on posting videos about the new website, so do visit our new website. It's www.pse.com.ph. For disclosures, you have PSE Edge, edge.pse.com.ph, and for investing materials, it's www.pseacademy.com.ph, which will have a new version 2 later this year. Please like and follow our official social media channels or pages. We are on Facebook, Instagram, YouTube, and Twitter. Our recorded webinars are posted in Facebook, and we also have the edited version posted in our YouTube channel. And of course, download the free PSE mobile applications. We have PSE Edge for information right at your fingertips, and PSE Easy for the upcoming IPO. If you're interested, you need to have the PSE Easy mobile app with you. So all you have to do is register, or you need to open an account with the broker first and then register, have that account verified by your broker. And once that's all done, you're ready to subscribe to an upcoming IPO. So there you have it, ladies and gentlemen, another learning-filled afternoon delivered to you by the Philippine Stock Exchange with our guest broker, China Bank Securities Corporation. I'd like to thank again our resource speaker, Mr. Ras Mercado, their head of research. Our topic, stock investing during a pandemic. So I hope that after this webinar, you're a little bit enlightened about, what to do. Should you invest now, wait it out, or if you're going to start investing, how should you do it? So with that, ladies and gentlemen, I wish you all a happy weekend, and I'll see you again next time. Again, this is John Garcia from the PSE's Market Education Department. Stay safe. That's your main priority.